Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, November 26, 2008. German import prices fell by 3.6% in October, a much bigger decline than was expected. In annual terms, prices cooled to 2.9%, a sharp decline compared to the 7.6% rate seen in September. German consumer prices, meanwhile, fell 0.5% in November, preliminary data showed, surprising forecasts on the downside. The annual rate gained 1.4%, the lowest annual rate since December of 2006. It has become apparent that inflation is retreating as the major economies of the world slide into recession, reducing economic activity and demand for commodities. It also gives the ECB leeway to keep cutting interest rates if it feels it's necessary to help spur growth in the economy. In the U.S., durable goods orders fell 6.2% in October, the steepest decline in demand in 2 years. Durable goods orders show the willingness of companies and firms to make big-ticket, long-term purchases. A key measure of capital investment fell 4.4% as companies restrained their investment spending in the face of weaker economic activity. Personal consumer spending fell 1% in October, the steepest fall in 7 years. October saw the acceleration of stock market losses and the intensification of the global financial crisis. In that environment, and with job losses mounting and housing prices continuing to suffer as well, consumers scaled back purchases in a large way. Incomes increased 0.3%, so there was an increase in savings going on. The report's inflation figures came in less than expected. The Personal Consumption Expenditure Price Index decreased 0.6% in October. The core PCE price index, which strips out energy and food costs, remained unchanged. Falling energy prices have been a major catalyst in falling prices, as consumers can fill up their tanks for cheaper and face lower heating oil costs in the winter. The number of Americans filing new claims for unemployment benefits fell last week to 529,000, coming very close to the forecasts by economists. Still, the figure remained far above 500,000, a very high level consistent with steep job losses. The 4-week moving average increased by 11,000 to 518,000. Non-farm payrolls have fallen 10 straight months, and the unemployment rate in the U.S. is at a 14-year high of 6.5%. A loosening labor market will add to apprehension to consumers as they worry about their economic security. That will affect spending, which will hurt companies' bottom lines and increase layoffs in what can become a vicious cycle. The Chicago PMI deteriorated further, posting a 33.8 reading for November, a 4-point reduction from the 37.8 seen in October. New orders and employment decreased for the month as the economy weakens and consumers and firms purchase less goods. The final version of November's consumer sentiment came in at 55.3, a sharp slide compared to the preliminary reading of 57.9. The difference between the mid-month release and the end of the month saw a deterioration in current conditions and a drop in future expectations. Weak consumer confidence has translated into weaker spending, as was seen by today's personal spending data. Sales on new homes fell 5.3% to an annualized rate of 433,000 in October, which is below forecast and is the lowest level since 1991. Americans are reluctant to buy new homes, while builders have scaled back housing starts. The inventories to sales ratio increased, while prices for a new home retreated. The euro-dollar pair retreated from its recent 3-day rally after setting an intraday high at 1.3070 to start the global session. It proceeded to fall overnight to the 1.2820 level, a change of about 230 pips. The pair found support at the 38.2% retracement of its recent rally. The data from the U.S., including weaker consumer spending, durable goods orders, and new home sales, brought back the harsh realities of what to expect for the rest of the fourth quarter and caused traders to seek refuge in the safe haven status of the greenback. The euro declined against the yen as well, falling to 121.90 in New York trading, a 400 pip swing from the high set in yesterday's session. European stocks ended a choppy session with mixed results, as a rise by miners partly offset a weak performance by insurers and others. Increased risk aversion as a result of worries over global growth helped boost the yen. A late rally in U.S. stocks helped buck some of the gains by the yen in later New York trading. The pound dollar also retreated from its recent rally. The UK released a second version of third quarter GDP, which showed investment and consumer spending falling. The attention on recession fears has brought markets back to the sentiment seen last week. The pair hit an intraday low near 1.5175 around noon New York time, a drop of nearly 300 pips from its high near 1.55. The late rally in US stocks helped the pound to bounce off support. Tonight, New Zealand will release data on trade and business confidence, and Australia relieves quarterly data on capital spending. Overnight, we get housing prices data from the UK, employment data from Germany, and the end-of-the-month sentiment report from the Eurozone. Tomorrow, the US will be celebrating Thanksgiving, so at night, Japan will reveal data on manufacturing, household spending, retail sales, employment, consumer prices, and industrial production to end the month. And that wraps up today's Forex news. Thank you for joining us here at CMSFX.com. We will be taking a break from our broadcast tomorrow for Thanksgiving, but we'll be back on Friday. So happy trading and have a good holiday.